Hello there. Welcome back to another learning video on TAwithMMK. My name is McKay, and in today's video we're going to briefly discuss why you should be using the traditional stock market charts and general outlook to help give you an edge when it comes to trading crypto. And what I mean by that is, I know when I speak for myself here, when I first got into crypto, I kind of just had a tunnel vision of just watching Bitcoin, charting it to decide what, altcoins I was going to trade, and I was only paying attention to news about altcoins. Now, granted, I got into crypto about a year and a half ago, and everything was going up, so that tunnel vision didn't necessarily serve me wrong, but over time I've learned that you need to have a better grasp of what's going on in the world around you. Now, I didn't grow up super interested in political stuff, economical stuff, financial stuff. Those are just not things that, I guess, sparked my interest. So I don't have a major, minor, or even necessarily a lot of knowledge when it comes to those topics. However, I have learned while trading crypto that it's important to at least have a general idea of the news going on around you and what's going on in the world. For example, right now we know more than ever with inflation and rate hikes, the war, in Ukraine, some of the economical and financial issues companies are having, that we know that that's having a direct impact on traditional stocks, which we also know have a direct impact on Bitcoin and our altcoins. So we're going to discuss that in today's video. And if you're liking the content, please remember to like and subscribe, and let's go. It's TAwithMMK. It's TAwithMMK. Now, one concept that's good to understand when you first jump into the space known as cryptocurrency is that crypto trades 24 hours a day, 7 days a week. Whether you're using FTX or Binance or Coinbase, you can buy and sell Bitcoin as a retail investor anytime, any day, any middle of the night. If you want to, you could wake up at 4 a.m. because you can't sleep, and you could buy or sell Bitcoin. However, if you're a large well looking to buy, maybe millions and millions of dollars worth of it, over the counter, or obviously an institution, that has to be done during the exchange trading hours. So that's something that's important to understand, just because you'll often see that's when volume comes in the most, and obviously we have other videos that will discuss volume being important as far as it relates to trading. But this is just a list that was put together by Crypto Revolution or Crypto Bitcoin Chris. I'll leave a link in the description for his channel. It is the group, a paid group that I'm a part of, that is where I learned to trade. So I definitely want to give a shout out to them for putting this together. But this is just showing you the trading hours for some of the major exchanges around the world. Obviously, we have 3 in the United States, which I'll go over in the next slide briefly, but you have your NASDAQ, the S&P 500, and Dow Jones, and it's showing here that they go from 9:30 a.m. Eastern time to 4 p.m., and then you have trading hours in Asia and the list of their few exchanges, and the UK and Europe. So if you want to take a screenshot of this, this is something that I keep mindful of as far as knowing when volume could potentially come in, especially as it relates to the United States and Asia. Now, next up, I just want to briefly go over the 3 charts or the 3 exchanges that we use in the United States. And on the last slide, those are the ones that go from 9:30 a.m. Eastern time, Monday through Friday, and close at 2 p.m. Eastern time. Right now, where I'm at, it's around 1:30 p.m., so in this case, the NASDAQ, which we're looking at on this chart, has about 30 more minutes left until close. And this is the NDX, is the ticker for the NASDAQ 100. The next one down is the DJI, which is the Dow Jones. And then the one below that is the SPX, which I bring up often on my channel, which is the S&P 500. Now, depending on the trader, each trader might have a preference on which one they use. The most common 2 used by traders as far as charting is either the SPX or the S&P 500, which I prefer, or there's the NASDAQ 100, which a lot of other charters or traders prefer to use, which was this first one. Now, ultimately, they all look very similar. In fact, I kind of wanted to even just show you real briefly that, back here in the COVID crash, you had this level here on the NDX. It dropped around 30% from that top to the bottom. From that bottom to its top, its local top that it had back in early December of this last year, was around 150% gain from that point. The Dow Jones saw about a 38% drop, so a little bit further drop, not quite as much of a top, about 102%. The SPX, which I think is more similar to the NASDAQ, saw about a 35% drop and about 120%. So they're all very similar, all between 30 and 40% drops, all between 100 and 150% pumps. I realize there is a difference between all of that, but ultimately, if you just look at their charts, you can kind of see they all look the same. They all kind of had a bit of a, we're on the SPX right here, bit of a parabolic pump, from the COVID crash up until this top of the end of last year, and now it's kind of in a falling wedge. You look at the DJI, same thing. Oops, didn't mean to do that, but you kind of have that parabolic pump, and ultimately it's now in a falling wedge. And the same with the NDX or the NASDAQ 100. Same thing, right? Parabolic pump. Now it's in a falling wedge. So they all look similar enough. So it just comes down to a matter of preference on which one you want to chart. Now, if you are a regular subscriber to my channel, you know that I typically chart and use the SPX. And so for today's video, just so I don't mess with my SPX chart or the fact that it is kind of messy, we're going to chart the NDX. Because again, to me, there's not much of a difference, right? So this is a weekly chart. And I'm just going to kind of briefly, quickly show that, hey, this would be what you'd want to do first, is go to your weekly, and you'd want to mark down some of your key levels of support and resistance. Obviously, I already had a few up here, key level there, key level here, you know, something like that. You just want to get down some of your key levels on a weekly chart. That way you have an idea of what levels are important on the weekly. This is just like any other chart, so I'm not going to go over start to finish charting it per se, but just wanted to kind of show that at that point, typically you would want to go into the daily, you know, get a little better idea on the daily for the last maybe year of price action, of support levels and resistance that are key. Clear to this level right here, been interacted with, resistance, somewhat support. It's kind of a zone, but support. You know, this level here, this level up here that was lost, you know, things like that. And the reason that we do this is because then as we zoom in day to day and we're getting ready to try to get an idea of the next, you know, few days to weeks to months of what Bitcoin's going to do, we can look at the NDX, for example, and go, okay, here's bottom to top. You can use things like your fib retracement tool and say, here's the bottom from there to the top of where it tapped out at the end of the year last year. And you can see, okay, we've lost the 382 right now. Now this is just from the swing low to that swing high, of course. So you're thinking of, okay, where would be a good confluence area to see a bounce? Well, you look back here, for example, and we're seeing that the price interacted here is support, you know, or resistance, sorry, then support, a little bit of support here. So this is zone would make sense for at least some sort of a short-term bounce at, you know, at least. Okay, well, that is also the 0.5 on the fib retracement level from that swing low to that swing high. So this is kind of how I use something like the NDX to gauge where I think stocks might see bounces or, you know, resistance on higher time frames to give me a better idea of whether it's a good time to be holding or hodling crypto, or potentially DCing into short positions, or just staying out of crypto altogether, or eyeing areas of accumulation for maybe the next bull run, and so on and so forth. All right, and then next up, I want to quickly show you a website that I brought up recently on one of my videos, which is the CNN.com /business markets, PreMarkets. Anyway, this is just a site that I go to, and I'll leave a link in the description every day to kind of check what the pre-markets look like, as far as this is after hours and early hours while the traditional trading is down. So any hours outside of 9:30 a.m. Eastern time to 4 p.m. Eastern time in the United States, this would be something I could access to see what is the pre-market looking like. Generally, if it's red, especially if it's very red, that gives me a good indicator that next day is probably going to start out at least with some selling. But generally, if it's very green, that helps me to know that, hey, it's most likely going to start out with buyers the next day. Now, the more red, the more green, the better as far as getting that direction. Of course, if it's pretty neutral, then it's not going to tell you a whole lot. But at any rate, this is the U.S. one for the pre-markets for our country in the United States. Now, granted, even if you're not from the U.S., it's a good idea to keep track of what our stocks are doing, just like it's a good idea for us to keep track of what stocks are doing in other countries. But whether you like to believe it or not, a lot of the rest of the world's stocks, especially as it relates to crypto anyway, are going to kind of follow what the U.S. stocks do. So if U.S. has a really down day because there were some bad earning reports that came out for Target, for example, you know, that might bring U.S. stocks down, which we know, regardless of what the other sessions do around the world, crypto is going to follow this very closely. So this is a good place to start. And what I look for on here, obviously, like I said, is just whether it's red or green. The more red, the better, or the more green, the better, as far as giving me a quick short-term outlook on what to expect the following day. And this becomes more pertinent as far as higher time frames go, the closer the price action is to either resistance or support, right? I use this for day trading, which is something, you know, that if you're brand new to the space, I don't recommend doing, of course. But if I'm doing quick in and out trades, which is what I'm doing right now as the market is very choppy, I'm using this to give me an idea when the day starts of whether something I'm going to trade is going to go to the upside or the downside. But you could also use this more zoomed out in confluence with your, you know, NASDAQ chart to say, hey, we're at a key level of support. Let me check the pre-market an hour before the stock exchange opens to see Is it very green? Are people wanting to buy this dip as support? Or is it very red, which means there's a high likelihood that that support level is going to be lost? Now, this next part might not be pertinent if you watch this video 2 years from now, but it's important to know what's going on in the world around you as it relates to economical stuff and financial stuff, because those will affect the traditional stock market, which will directly affect crypto as well and Bitcoin. So for example, in this video right now, we know what the rate hikes going on in the world as of the 20th of May here in 2022. We had the one back in March that was 0.25. We've had the recent one in May that was 0.5, right? So I come here to go to this, this is the federalreserve.gov website. I'm looking at their FOMC calendar to see when the next, scheduled meetings for the FOMC are, and we can see that, okay, June 14th and 15th there's a meeting, July 26th, 27th. So we can, make a plan around those dates, set an alert on our phone, whatever it takes to go, hey, stocks are going to react to that news, right? Because the traditional stock market will react based on what those rate hikes are. Often before and by a few days, the price will either go up or down based on what the rumors of the rate hikes are going to be, which right now we kind of just know there's going to be rate hikes basically every one of these meetings. And so no matter what stocks was doing maybe for the weeks leading up to it, I can kind of know to be cautious during those times, right? So depending on what's going on in the world, you want to keep track of these things. Another good person to follow is MeetKevin. He's a pretty big YouTuber, so most people have heard of him, but if you have not, I'll leave a link in the description for his channel. Also, I follow his Twitter feed. Being a large influencer like he is, and the fact that he focuses primarily on traditional stocks, if there's some breaking news or something that could affect price one way or the other, he's a good go-to or a good resource to put out some sort of a tweet, typically related to that. And just to summarize, just be mindful of what's going on in the world around you, economical things, financial things, war. Just keep track of these things, whether that's alerts through some Twitter feed you follow, even if it's not of your interest, which I am the first person to say that anything political, a lot of times stuff going on in the world, I've only now been taking more of an interest in, especially now that I'm trading and it directly affects my trades. But growing up, it just wasn't an interest of mine. I have no problem admitting that, and maybe you're similar. But just be wary of what's going on in the world around you, because it will have a direct impact on what direction stocks trade or trend, and that obviously will have a direct effect on Bitcoin and your altcoins. So if you want to have a little more success, have a little bit of an edge, hopefully this video helped you in some way. If you guys are liking the content, please remember to like and subscribe, and we'll catch you next time. It's TAwithMMK.